Hang Seng trading with losses of around 0.3%. The Taiwanese index is down 0.5%.
3 days now, it's faced selling pressure around the 40-day exponential moving average. That number is about 24,350. The Nifty is absolutely flat, 24,280.
Let's say if you are able to garner $7 billion of more business, then an industry like this can grow maybe 300%.
We are still sticking to our 24,000 crores guideline.
We're trying to get some confirmation, but it appears the street is a little bit jittery about some geopolitical issue that just played out in the last 10 minutes or so. And because of that, the street has got a little bit cautious.
Markets are turning volatile. The Nifty's dipped nearly 250 points from the day's high. The high today was 24,350.
The market has given up most of the gains that it's seen since morning.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Rima, with me Surbhi, Nigel and Prashant are also with us. We're at the day's low. The Nifty's breached the 24,000 mark. We're right now at 23,970, 300 points gone on the Nifty. It's a full bear attack and it came out of nowhere, Surbhi. The morning was fine, right? No one saw that, the sensex going to fall close to about 1,000 points, and it's across the board. The silver lining is the mid-cap index at least is in the green.
No, this is very disappointing. You'd have to say that, Rima, because after sort of consolidating and building a base around this 24,000 level for 3 to 4 sessions, it's just gone on a flash just like that. And by the way, this is an India-specific fall. It's not like markets across the world are, slumping. In fact, there's some green on European screens right now. Asia, yes, our neighborhood, Hong Kong, etc., they were lower. The Chinese markets were also lower, but nothing coinciding with the fall in India. Basically, this is not a global specific fall. Anyway, we don't have US markets later tonight. This is an India-specific story, and we'll go back to looking at what's happening with the FPI number, because the large cap space is where the bulk of the selling has happened. But yeah, not a great afternoon for sure. Nigel, let's see. I don't know. Let's see if there's any recovery in the last hour or so. But bulls will be disappointed after 3 days.
Well, that's right. But, I'll tell you what, towards the end of close, I won't be surprised if we end closer to around the 20-day MA, which means that the Nifty could possibly recover close to around 80 points away from these current levels. So let's see how that goes. We're below the 20-day MA, but I think the bulls will want to put in a bit of a fight like they've done in the last few sessions. Well, let's get in. Mitesh. Okay, all right. I think the studio wants to take over, so, guys, back to you.
No, we'll just look at some more stocks before we go to Mitesh, Nigel. So let's take a look at what's constituting this big fall. It is large cap oriented. In that sense, it's very interesting because the mid cap index is still managing a small hint of green, tiny hint of green, 70 points higher on the mid cap index. The advanced decline ratio is still even, Stephen. The breadth of the market is holding. It's just that there is a complete slam dunk on large caps, which is why I'm raising the point on the FPI number or the institutional numbers. Now, is it domestic institutions that have suddenly decided to take profits? Is it FPIs? We'll have to wait and see. But in terms of the constituents on the way down, check out, of course, life insurance stocks, and we'll get Yashin on the show in just a bit, because it seems that even the insurance regulator is paying heed to what the finance minister has said. And the bank assurance channel, perhaps that's going to come under increasing scrutiny for insurers going forward. And that's a huge channel for these companies. And therefore, the disappointment is quite evident on the stocks. And then there's tech, which is down. A lot of large cap tech is down. Auto is down. So, pretty much it's an all-round large cap sell-off. But it's only large caps for now.
It's only large cap for now. So how should you position yourself in the last 1 hour of trade? Mitesh is now with us for a few closing strategies. Mitesh, it's also the monthly expiry, so that's adding to the volatility. But what's been your approach to trade so far, and any last star calls?
Yeah. So I think, we were having a slightly positive bias, and, the last 3 days, looking to buy around 24,000 and 150 levels. We did take a long and it got trickled out. So for the timing, I think, 23,950 is a support area, but we haven't bought it yet. The bias still remains on the slightly positive side, given the fact that, the indicators are pointing upwards, but the price action isn't supporting. So I think when there's a slight conflict, I think, and your trade isn't working the way you would want it to, best, wait for a clear signal to emerge on both the price and the momentum charts. And I think if 23,950 holds, then we might get a reversal, and that is what I'm looking for. On the stock side, I think buy on L&T can be initiated with a stop below 36.35 for targets of 37.60 on the upside. And L&T hasn't fallen as much in this declining market, so it looks a much better chart in terms of outperformance as well. And the other stock which I have is a buy on Manappuram with a stop below 153.5 and a target of roughly around 162 on the upside.
Okay, let's get to the big story, and that's the insurance sector and the kind of sell-off that we're seeing in life insurance names. Now, sources are telling CNBC-TV18 that the insurance regulator is concerned about the share of business that they're gaining from bank insurance channels. Yash is here to tell us more. Yash.
Well, Rima, you rightly pointed out very recently the finance minister and the IRDAI chairman both spoke about the fact that mis-selling or forced selling is increasing through bank assurance. But we've been given to understand from our sources that mis-selling is not the only concern for the insurance regulator. The insurance regulator also seems to be concerned about the growing share of banks as far as sales for insurance companies are concerned. In fact, to that concern, what we've been given to understand is that the regulator, that is IRDAI, has also told life insurance companies to gradually reduce the share of banks as far as the total sales are concerned. In fact, the regulator also seems to be suggesting that the share of banks as far as total business is concerned should be around less than 50% of the total business. What we've been given to understand is that the regulator is expected to monitor the business through banks in the coming months, and if it does not come out less than 50%, then it could also consider providing a glide path to insurance companies to have it under the limit as prescribed or advised by the regulator. That's not the only concern. The concern is also the share of parent banks of these insurance companies as a part of the total bank assurance sales. And the concern for life insurance companies is quite obvious, considering the large business which they get from banks. For HDFC Life at 65%, SBI Life 58%, Max Life at 52%, ICICI Prudential Life at 29%, and LIC at 3%. What is more concerning is the number on the parents bank side of the total bank assurance business. For SBI Life, the business that it gets out of the total bank assurance from State Bank of India is at 95%. For HDFC Life through HDFC Bank is at 80 to 85%. For Max Life, it's at 90%. Through Axis Bank, for ICICI Prudential Life, it is just at 50%. Explains why HDFC Life, SBI Life and Max Life are facing deep cuts in today's trading session, whereas ICICI Prudential Life is still holding up.
Right, got that, and those are helpful numbers. Yash keeps the context very, very clear how big this channel is for insurers and why those, therefore, insurance stocks are worried today now that the regulator is also talking about it. Let's actually play out, bites, and with the caveat that these, of course, are bites coming in from interactions that happened earlier in the month. Starting off with Finance Minister Nirmala Sitharaman. She first raised this point, saying that banks should perhaps go back and focus on their core business of banking rather than selling insurance policies that customers may not always need. Take a look.
Trust should be built by the way you offer your portfolios, by the way you offer your service, and by the way you look at each customer's requirement without clubbing them into one class, particularly in the context where banks facilitate the distribution of insurance products. I wish to say this for due consideration of the bank's boards. While this model has significantly contributed to improving insurance penetration across the country, it has also raised concerns about instances of mis-selling, and I would say added or contributed in indirect ways of increased cost of borrowing for the customers. So banks will have to look at it with a lot more emphasis on their core banking activities and not burden customers with insurances which they don't require.
When we buy insurance, obviously this becomes a very easy place for me to access, to understand, and I would expect that the bank, as a customer, would sell me the right product at the right price. So obviously the banca channel is a very useful channel, but of late a lot of ills have crept into the system. I think we all need to sit together, thrash out that so that we restore that confidence, and it should become a distribution model which is low cost. You don't need to run after, chasing customers. You have to give the option to the customer, no mis-selling, no forced selling, and of course the Bima Sugam will also facilitate all of that. So I believe that there is merit in this system, but we have to do it with care and caution so that you don't forget your activity and only start selling insurance.
Okay, so there you heard those comments were made earlier this month. It seems that now it's really hitting home because as Yash has been reporting that the insurance regulator now seems to be taking cognizance as well. And the fear is there some action, some curbs that will be perhaps, on their way. Gautam Dugar is joining us from Motilal Oswal Financial Services. Gautam, great to have you this afternoon. This is a good change. I think you should join us on the afternoon show as well more often. We'll talk about earnings, we'll talk about market, all of that in just a bit. But first, this hot subject, insurance, always, I mean, the risk to, the policy risk for insurance has always been very high, from taxes to the new IRDAI norms and now this latest comment from the FM. What's your stance on life insurers?
So, good afternoon. On insurance, we find we haven't had any insurance stocks so far in our model portfolio, even though we like some of the names there. This latest development which has come, we'll have to see how does this work out, what is the impact on numbers and growth per se, what is the relevant mix of bank assurance and different companies. But obviously, the first reaction is a knee-jerk, as you're seeing in many of those stock prices. But within financials, we've been very clear. We are overweight more on banks and non-lending financials, which basically includes capital marketplace.
Gautam, hi, afternoon. Let's get to the earnings picture and the way forward. Because since August, you have reduced the FY25 Nifty EPS estimates by nearly 5%. And now you're expecting a modest 5% earnings growth for FY25, the first year of single-digit growth in over 5 years. What are your channel checks telling you about Q3? Is there a risk that the expected recovery does not play out? If you could give us, the color sector by sector on what we should expect in H2.
So first half was obviously muted, as we've explained and discussed in the past also. The first half earnings are flat. We're expecting second half to be better than first half, but please understand that the softness that you have seen in first half is entirely owing to what happened in commodities. So for our coverage universe, X of commodities, first half growth is 13%, and next half is also 13%. So not much is changing if you exclude commodities between the two halves, right? Definitely there is a moderation which is set in at an aggregate level, because last year was very solid at 25-26%. The bigger concern aside of this aggregate numbers was the downgrades were much higher compared to the upgrades. And we've seen almost 40% of our coverage universe has missed expectations. So while FY25 obviously is a subdued year, 5% growth, within that second half slightly better, but 26 is where we are pinning our hopes on about 14-15% growth. But more importantly, what has also happened through the earnings season is while the narrative around earnings was very weak, you've seen several bottom-up ideas across sectors which have posted fabulous numbers, and which is why we put out that note on which are the winning sectors or ideas from the second quarter numbers. As regards sector, our stance is clear. We are overweight on financials, IT, consumer discretionary, real estate, and telecom. And rest of the sectors, commodities, we are underweight. And then whatever is left is market weight or neutral.
Hi, Gautam. Let's talk about the big event of this week. The BJP romping home with a big majority here in Maharashtra. There were a lot of infra companies that appeared a little bit nervous going into that election. But now there's going to be continuity and all probability an infra push. Your view on this, and also how do you play this theme?
Yeah, Ajal. See, look, first half, the government capex spending is down close to 15%, whereas their full year budgeted number is 17% growth. So obviously the implied assumption is that the second half, like to like, if the government were to meet the budget estimates, the second half capex spending has to grow 50%, which looks difficult now because, the capex spending requires a lot of time. So even if it is not 50% and instead of 17%, the government meets 12-13% YOY growth number, it'll still make 2H FY25 look very attractive in capex spending. The second point that you mentioned about the political stability in one of the largest state of India as far as the economy is concerned. In fact, I think Maharashtra is the single largest contributor to the GDP. So what happens in Maharashtra definitely matters. And we've all seen last 5 years in Maharashtra were quite unstable insofar as politics is concerned. I think this verdict, which has given a huge majority to the incumbent NDA government, and within that almost close to majority to BJP, will definitely bring a lot of stability in the governance and kickstart the policy agenda. More importantly, it will also bolster the confidence of the central government because they've now have scored 2 big victories in Maharashtra and Haryana after a minor setback in Lok Sabha. So we all are hoping that all of this will definitely make the government more active on spending and bring back the growth. And at the same time, you're also seeing consumption in the rural, which was very weak for last 2.5 years, is now recovering at a margin. However, the additional headache is the urban has moderated a bit, as you've heard from multiple companies during the second quarter earnings season. So yes, I mean, there are challenges which were there in 1H. We see those challenges receding bit by bit, and hopefully that gets reflected in the market also going ahead, especially the valuations in large cap have now become slightly more attractive. They were reasonable earlier also, but given that 3-4 months have also gone through, and there has been about 8 to 10% correction in Nifty, now on FY26 you are below 20 PE. So large caps look quite fairly priced in my view, while mid caps and small caps are still quite expensive.
Okay. I just want to flag off Gautam's winners and laggards list after the second quarter. And I think a lot of the winners also make it to your model portfolio. So let's get the stocks up. SBI, L&T, M&M, Sun Pharma, Indian Hotels. Yeah, these are all the winners after the second quarter, as per Gautam's research. Angel One, Amber, Atul, a lot of these companies have had sort of phenomenal growth and a good showing in Q2. The laggards include Tata Motors, Asian Paints, Avenue Supermarts, as we know, the weakness in the consumer space. ABB India has missed the mark in this quarter. And IndusInd Bank was a clear disappointment as well. So some of the stocks are flagged off by Motilal Oswal. On the winners, Gautam, so I thought Page Industries was a really interesting pick. Just walk us through, and you're talking about consumer, right? Consumer is really confusing right now. We don't know whether this urban slowdown was 1 quarter. Is it going to last? What's happening with discretionary? Rural, everyone is saying, is looking better. So what's the thought process on Page? This company has been in repair mode for several quarters now. And how else would you play consumer? Because the added angle is the state elections. Because what we now know is most parties are promising some sort of a welfare scheme or a freebie or something or the other. And there are more state elections ahead.
Yeah, so look, consumption, you cannot paint it with one brush because staples are going through a very different trajectory on earnings and volume growth compared to some of the discretionary segments. While staples are struggling to grow 3-4% volumes, you have companies like Indian Hotel, which is also a consumer sector, by the way. You have companies like Titan and all in the jewelry space. They've posted a very solid set of numbers. So consumption has become a two-way street. If you are in the premium side, on the high ticket side, companies like Train, Titan, all of this, and of course Indian Hotel, they're going through a very different time. And if you're in the mass end of the consumption with low ticket size catering to the bottom of the pyramid or low middle class, then obviously you're in a bit of a struggle. Urban, this is the first quarter where we have heard that urban is a bit of a problem now. We need to see and wait and watch if this continues or if it recovers. The heartening thing, however, is that rural is recovering. So the way we are playing it is for last 3 years, we've had a major underweight on staples. Our entire weight on consumption was residing in consumer discretionary. And that stance has not changed. We are still holding about 8 to 9 consumer stocks in our model portfolio also, out of which, excluding one name, rest all 7 are discretionary spaces. As regards Page, after 4 years, we've changed the rating from neutral to buy. We see growth making a comeback. We are projecting close to 20% earnings growth. It remains a very solid franchise, by the way, insofar as distribution mode is concerned. The way they run, they manage the balance sheet, almost 40% ROCE consistently over the last decade. The growth had slowed down last 3 years. Post-COVID, we've seen a very moderate to tepid growth. And in that segment, I reckon there was elevated competitive intensity also, which we saw. So we are seeing that making way for a slightly better growth now, which is where we had changed the rating also on Page during the quarterly results season.
Gautam, this week we've seen big moves in the food delivery, quick commerce space. So Swiggy's moved up 16% this week. Zomato is up close to about 8%. Yesterday, UBS's note titled it that there is plenty of room at the table for everyone. I know you have a neutral call on Swiggy, but that's been achieved. I think your target price was, 480, 490 thereabout. Do you think there is a lot more upside? And now even Amazon is entering the fray with these.
So, Rima, look, this is one space within the overall consumption space where growth rates are absolutely phenomenal. They're all growing at 30, 40%. And as a category also, if you look at the projections for a quick commerce category top down, over the next 10 years too, I won't be surprised if at a category level, they can continue to grow at 20% plus. And that's a huge number because 20% at an industry level can translate into 25, 30% for some of the players. So I think a lot of winners will be created out of this category. Our call on Swiggy was primarily owing to short-term valuations, which is why, while we like the business, we didn't like the valuations. But if you're in kind of a market where stock moves 20, 30% very fast these days on either side, without getting swayed by that, I would reckon that this is the industry where one must have an exposure and must have an exposure with a slightly longer-term horizon. Because today, they are a fraction of the overall retail consumption market of India. And if they manage to grow at 20% at an industry level for next 5 to 10 years, this category can become very sizable, which is why we are very positive on this industry. And we think multiple winners can emerge out of this category over a period of time.
Okay, all right. Good conversation as always. Gautam, thank you very much for joining in and giving us your sense on how we are poised at the end of the second quarter earnings season. Well, with that, we do have to take a very quick break. With the news, the market's still down 350 points. Not much has changed. We'll take that break, come back. And Varun Goyal of Mirae Asset Investment Managers will be with us on the other side.
An idea is all you need to start a business. For you to succeed and scale in that business, what you need are a series of boring, non-glamorous, repetitive daily decisions. And that's exactly what this series is all about. The nuts and bolts of business success.
Welcome back. In the broader markets, the Adani complex is higher today for the second day in a row. Big gains. Adani Total Gas, 15%. Adani Energy, 10%. Adani Green, 10%. So that's a basket. Adani Power, too, up nearly close to about 8%. Pretty large volumes. So that's higher. Honasa Consumer continues to rebound. Remember, post the numbers, we saw the stock slam from more than levels of 400 down to about 200, 250 thereabout. And since then, the stock is trying to rebound. It's gained in 3 out of the last 4 trading sessions. And today, you are seeing it locked in an upper circuit. Ola Electric has now gained 35% this week. Pull up a 1-week chart of Ola Electric, another 5% gain. IREDA amongst the PSU names makes it to the buyers list, and Electronics Mart, which Nuvama is betting on and kept a target price of 237, as they expect the company's profits to go up by nearly 18% from FY24 to FY27 as it expands into the NCR region. Electronics Mart, a bet of Nuvama, is also doing pretty well. Varun Goyal, Senior Fund Manager of Equity at Mirae Asset Investment Managers, is with us on the show. Varun, hi, afternoon, and thanks so much for joining in. What have you made of all this recent news flow, news flow surrounding Adani, the possibility of tariffs on day one of Trump taking power, taking charge, the stocks rebounding and now today collapsing? Give us your thoughts on the markets and what we've seen over the last 1 week.
Good afternoon, Reema. Thank you so much for having me on the show. I think as far as the change in government in US is concerned, I think there is a lot of expectations on both positive and negative sides. As far as I think India is concerned, specifically for the IT sector, we do not expect a challenge in terms of visa and for Indian workers. I think most Indian companies today have a presence in US onshore, and therefore I don't think there will be a large impact on that. Selectively, there might be some sectors or companies which might be impacted by some tariffs. But we do not expect overall a big negative impact on Indian economy or markets in general. I think broadly, we are still 2 months away from the inauguration of the new administration and exact policies. And I think one would come to know only once they take office. But broadly, I think the period 2016 to 2020 was pretty good as far as India was concerned, both from an economic and a geopolitical perspective. So this time also, we are quite hopeful that there will be no material negative impact on India. I think recent correction in the market is more as a result of the slowdown in earnings that we saw in Q2, and we are quite hopeful that come January, when the Q3 earnings come, we will start seeing uptick in corporate earnings, and that should we should see a revival in growth. The cyclical slowdown that we've seen for the last few months, hopefully, we should see the reversal of that, and growth should come back very strongly going forward.
All right, hi Varun. Good afternoon and good to see you in. Nigel on this side. I recall we spoke last, right? You were quite positive on tech. Wow, what a big rally we have seen. I think from early October till now, that index is roughly around 8 to 10%. So that's done quite well. What's your view right now? One school of thought says that Trump is good for tech, his spending is going to go up, particularly on services, which bodes well. But valuations are not very cheap. Would you stick to these names? Because now, if I look at the Nifty IT earnings growth, it could outperform what the Nifty earnings will be. Your take.
Good afternoon, Nigel. I think broadly, as far as IT sector is concerned, we would expect a healthy double-digit earnings growth as we get into FY26. I think this year, while we have already seen revenue reviving, we have seen some large orders also coming in. We expect the margins to start improving from the January quarter. So I think broadly, earnings seem to be on a revival track. FY26 should be a year where we should see the large cap companies delivering a low double-digit, and a middle and small cap companies can potentially do higher double-digit earnings growth. So we remain constructive on the sector. Having said that, the valuations have definitely moved up in the last few months, and therefore, one needs to take that into account. So we are pretty comfortable with the current slight overweight stance on IT, and I think we will maintain that going forward.
Varun, hi, afternoon. What about insurance? Where do you stand on this? Because there's a big worry in the market now that something is coming on this bancassurance channel.
Yeah, good afternoon, Subhi. So I think there's a lot of speculation as of now. We would hope that if there is any change, the regulator will come and we will have some discussion amongst the industry participants. So one would wait for the dust to really settle in terms of what are the policy measures. In fact, I would just like to point out that there is also expectation that there might be tinkering with the GST rates in the next calendar year. So that might also be a positive thing for the insurance space as a whole. So let's wait. There seems to be a lot of things which might be happening on the IT space. And I think the budget in the first week of February might give us more clarity on some of those matters.
Have you made any purchases in the last 2 weeks, Varun?
Rima, I think our portfolio has been largely stable. We, of course, as we have seen some correction in some of the industrial / capex names, we have been adding a little bit to that side. I think we have added a little bit to our exposure to the banking space. But other than that, the portfolio largely remains stable.
In banks, it would be the large private sector financials? Or are you including capital market players, etc., NBFCs?
Yeah, so I think banks is coming out of a period of earnings slowdown. I think last 4 quarters have been soft because of margin pressures. I think we are largely coming to the end of these pressures. Also, finally, the deposit growth and the credit growth are now converging. Incrementally, as the RBI cut rates from, let's say, the first quarter of next calendar year, we would expect banks to have a healthy margin profile, and we expect the credit growth to remain at 12 to 13%. The credit costs remain largely contained. So we believe that the earnings growth in the Tier 1 banking names, both public and private, should come back very strongly in the next financial year. In fact, for the Nifty as a whole, we believe banks would be the biggest contributor to a strong earnings growth revival for next year. So we remain quite constructive. We have been adding to our exposure in large private and public banks. Also, we remain, I think, the financial savings as a theme, be it asset management companies, wealth management companies, exchanges, and various utility providers. We remain quite constructive. I think that's a decadal theme, and we continue to increase our exposure whenever there is an opportunity.
Varun, you have been constructive even the power space. Could you tell us which part of it are you playing at? This week we've got a lot of news flow, on the power sector. What do you like? You had NTPC Green as well that listed. Not too much interest. I think the IPO price was 108. Currently, the stock is 131 rupees in 2 sessions. What part of the power space are you all playing?
So I think there is clearly, with the way things are, there is clearly scarcity of power capacity. I think the power demand growth is going to surprise everybody in the next few years. We are going to see, of course, the shift from the fossil fuels to the greener energy. So we expect that part of the space to do well. But at the same time, we would believe that as more energy guzzling sectors like data centers become more prominent in the economy, the demand will continue to be robust. So we expect both thermal ecosystem players and the renewable power players to continue to do well for the next 3 to 5 years. Also, I think transmission is a space where probably we have the largest shortage, and that is one space where we will see massive capex in the next 3 to 5 years. So those companies which are involved in the power transmission space should also see very, very strong growth in the next few years.
Okay. By the way, the fall is now almost 400 points on the Nifty. Don't lose sight of the market as well. The 3 p.m. move, for whatever it's worth, is it going to help us take the market higher? I don't think so. This is a move that's more on the way down right now. 23,873 is the lowest level of the day, and we are practically there. So it's crunching pressure coming in on all sides of the large cap market. Varun, just a word on financials. How are you placed on NBFCs? There's a lot of talk about stress in the MFI sector in specific. I don't know if you had any exposure to some of these lenders and whether you think this is a passing phase. What's your sense here beyond the large banking names? How are you playing the NBFC space, and a word on MFI as well?
I think MFI, clearly there has been some distress in the space for some time, and I think it will take another 2 quarters for the dust to settle there. In the meantime, there will definitely be increase in delinquencies. There might be pressures in terms of higher credit costs, and hopefully by the first half of next financial year, we should see things stabilizing. So that is a space where we are not incrementally looking to add in the short to medium term, but from a slightly medium to long term perspective, I think the space delivers healthy return on equity and good growth. So I think we will get to a point where the space becomes more attractive. as of now, we're picking up more in the large banking space as compared to some of the MFI players.
Thank you, Varun, for joining in. In fact, let's take this discussion forward on the NBFC microfinance space. Abhishek is now standing by at the big wall, and he's going to discuss the pain in the books of lenders in the microfinance sector and how H2 of this fiscal year is possibly looking for them. Abhishek.
In May of 2024, CNBC-TV18 had alerted viewers about the pain in the books of lenders in the microfinance sector. The pain is more evident in their numbers now and is expected to continue in the near term, or let's say next couple of quarters. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty. Lenders have seen their stock price correct from as low as 28% to as high as 60% in the last few months versus Nifty gain of nearly 5.5%. So from the data, one can clearly see decline in their growth rate, while asset quality has deteriorated, leading to rising credit cost. So credit cost for most of the players in the microfinance sector is generally on the higher side, given the fact that when their asset quality deteriorates, the recovery chances are really very low. So write-offs have to be on the higher side to make up for the same. AUM growth rate has declined for most of the lenders like Credit Access Grameen, Spandana Spurti, ISAF SFB, Satin Credit Care. Now, growth has been weak for lenders like Fusion Microfinance, Suryodaya Small Finance Bank, as well as Ujjivan Small Finance Bank. Asset quality continued to deteriorate for last 4 quarters in a row. The pain is expected to continue. Hence, NPAs have not yet bottomed out. Asset quality has deteriorated the highest for Fusion Microfinance, Spandana Spurti, Utkarsh Small Finance Bank, and even the best lender, Credit Access Grameen, has seen its gross NPA nearly double in H1 FY25 over FY24 numbers. Slippages were massive for lenders in H1 FY25. Some of the lenders have already made higher write-offs, which has impacted their provisions, but kept a bit of control in the deterioration of their asset quality. Return ratios have depleted for most of the lenders, while some of them, like Fusion Microfinance, have reported net loss for 2 quarters in a row. Now, analysts and management do say that asset quality will see further pain in the near future, at least for next couple of quarters. Hence, you can expect credit costs to remain elevated for most of the players in this segment. Credit cost is generally high in the events of defaults, given the fact that recovery is on the lower side in this segment. Over-leveraging had been a great concern highlighted in May 24 by CNBC-TV18. Many lenders have now given details with respect to over-leveraging of their customers. You can expect the AUM growth rate to be under pressure for some of the lenders as over-leveraging of customer reduces. Stock price have seen underperformance with respect to benchmark indices. Earnings pressure could keep a tab on their valuations.
Welcome back. Well, markets at the low point of the day yet again. We're down 350 points, but if we're looking at the pocket where it's still looking good, well, I'll tell you a couple of positives. The mid-cap index is still in the green, and you still have more number of stocks that are advancing than the number of stocks that are declining. So that's the bright spot today. But it's a good time to get in Nimesh to tell us. Nimesh, what are flows looking like, and how do you see trade setup?
Well, Nigel, a couple of reasons why the markets are down. One, of course, is the expiry-related pressure that's playing up, and also there is lack of buying interest in the large cap names today. So that explains that the nifty stocks are under pressure, and that too, if you look at technology is down today, Reliance is down, and so is the insurance name. So that's a very select pocket which is dragging the nifty down. The breadth is, as you rightly pointed out, is quite strong. The mid cap index is pretty much flat or in the green. A lot of individual names are buzzing as well. From a flow perspective, again, it's a mixed day, but I understand the buying into the PSUs continue. So that's one space where there is selective buying from the larger institutions. But broadly, I guess it's the expiry which is adding pressure. But for the December series, there are no big triggers to watch out for, right? I mean, I think we'll mirror what's happening in the global markets. The FI flows have actually slowed down a lot, so that's positive. The monthly data for December is expected to be strong, so that's going to be a positive thing. So looks like there could be a bit of momentum in the broader markets, at least in the December series. And of course, there is more work for that another 35-40 stocks are getting added to the F&O.
Yeah, more work for traders, I would say. I mean, I'll track them. Happy to do that. What about individual stocks? But wow, what all should we track?
So again, in terms of individual names, the first stock on my list is HBL Power. That stock has been buzzing in a weak market. Even today, the stock is up, and for the last couple of days, the volumes on the higher side. I understand the city is anticipating some large order win for the company very soon. I think that's the reason why the stock has been buzzing off late. The second name is Park Hotels. After a long time, there is some bit of traction back in that particular name. For the last couple of days, the stock has been buzzing as well. I understand there is a clean out trade expected from a domestic mutual fund in Park Hotels very soon, and there is a very strong bid as well for that particular block. So that's the reason why that's been buzzing off late. The third name is Interglobe Aviation. Within the large cap names, this is one stock which is well bid by larger institutions today. So expect high delivery volumes, and those are on the buy side from larger FIs in Interglobe Aviation. And the last is a couple of stocks where I'm expecting large blocks deals very soon. Spandana Spurti as well as in ADF Foods. In Spandana, the buzz is that maybe the ex-promoter is likely to sell out stake. And in ADF Foods, the indication is that maybe one large investor will sell out a big chunk. So that's the buzz on both those names.
Thank you very much for that, Nimesh. Mitesh is now back with us for a few BTST calls. Mitesh?
So I have one on the buy side, one on the sell side. On the sell side, start a consumer, keep a stop at about 946, look for a 930 kind of a target. And Polycap somehow is totally defying the decline. That's BTSC with the stop at 71.25. Look for 71 EPS target.
Okay, all right, Mitesh, got that. Thank you very much for all the calls today. We'll touch base with you tomorrow with the market. You have a good rest of the day. Let's get you some market perspective now. Even in this volatile market, ace market investor and veteran Madhu Kela of MK Ventures is still seeing plenty of pockets of opportunity on the street for the medium term. Listen in to what he believes are promising investing themes and ideas going forward.
You look at the CDMO business, right? It is roughly $200 billion worldwide. And there is a breakup of what is there in India right now. It is only $7 billion out of $200 billion. It's projected to go to $300 billion. These are data even before that. So I'm just saying India is anyway going from 7 to 14. But mind you, China is projected to go from 25 billion to roughly $45 billion. If some amount of that incremental growth also comes to India, let's say if you are able to garner $7 billion of more business, then an industry like this can grow maybe 300%. I am a big believer in the capability of the group. I am invested and I have bought more in this fall. I want to be making very clear that, and these kind of events, in a large corporate life, these kind of events will happen. And I frankly do not see the reason for this level of panic because of the case which is being pointed out.
intend going down the phone route?
No, I don't think. We
No?
are happy with this
So
space.
that's a Lakshman Rekha.
There is no to anything and not easy yes to everything.
What was that like for you? I mean, getting a Virat Kohli, for instance, on board.
Who's the right fit for the brand? Who's that noise maker who makes the noise in his own field? Who is fitness freak? Who can influence the customer?
He was Bhaiya and you were the young boy who was following him around.
When I was getting married, he was dating, for an example. When I was having kids, he was thinking of getting married.
Do you miss aviation at all?
Not miss that much, but yeah, I try and keep my license renewed. So
You've been managing to log in the hours
Fortunately,
to renew it?
this business allows me to spend that money extra on keeping my license renewed.
Maybe he has in his back of mind that he might need to go back there.
Go back at some point,
that's a backup
is it?
plan.
Welcome back. About 8 odd minutes to go before the day closes out. So as we get set for market closing, let's move to a CNBC-TV18 exclusive. Well, we've been telling you earlier that Aster DM is in advanced talks with Blackstone Old Care Hospitals, and now we are understanding that the deal is imminent. We have Rachna joining in with the details. Rachna, she has her ear to the ground. What are you picking up?
A deal is imminent between Aster DM Healthcare and Blackstone-owned Care Hospitals, marking a major consolidation in India's healthcare sector. CNBC-TV18 had exclusively reported in August that Aster DM was in talks to expand their hospital network through Care Hospitals. Blackstone, which owns about 72.5% stake in Care, and Mopin family, holding about 42% in Aster DM Healthcare, will be doing a share swap agreement to finalize this transaction. The deal will create a new entity in turn with a leadership team comprising of executives from both Blackstone as well as the Mopin family. And ownership stakes in the new entity will see Blackstone holding about 34%, TPG at 11%, and the Mopin family about 23%. With each partner, that's Aster and Care, bringing in about 5,000 bed capacity to the table, this collaboration is poised to significantly enhance the scale and operations across India's healthcare landscape. And this will make the newly created entity second biggest hospital chain in the country. CNBC-TV18 has reached out to Aster DM Healthcare and Care Hospitals for an official response, but is yet to hear back.
Yeah, and I think there's a board meet, Rachna, on the 29th, where this was announced just earlier this week, where they will consider issuance of preferential shares of up to 5% equity. And they've also said that they're planning to hold an investor call on the 29th. That's tomorrow at 5 p.m. So I guess it pretty much, it could be, linked to this deal.
We will be watching out for the updates that come in from the investor call and the board.
Yeah, there is a board meeting tomorrow, which is scheduled, and the company had updated the exchanges about it. And they just said that they're planning to, meet to raise some money via the preferential issue. And now this is the latest that Rachna has picked up. Ambrish is now with us on the show now. Ambrish, comment on the hospital space, in particular Aster DM and this and the deal which is brewing.
No, I think this deal should be good for Aster DM, and becoming the second largest chain in India post this deal, I think should clearly improve their valuations. So I think clearly it's a positive.
Okay. Ambrish, what's your sense on the Adani group now? I don't know. This is not for everybody, not everybody's cup of tea. But once again, the rebound on these stocks has also been pretty stark. Do you have any exposure? Would you look at buying anything?
First of all, the people from the market have actually got used to all these controversies coming every now and then. I think this is the third or fourth time we are seeing such controversies coming. And after a couple of months, we see that it dies a natural death. So typically for a trader, I would say any sort of such controversies coming and the markets having a knee-jerk reaction is an opportunity to buy at lower levels to, in fact, book out on a bounce back. But if you ask me fundamentally, I still find most of the Adani stocks expensive even at these levels, though we have seen a correction from the last 1 week, 10 days. But I think it's for a trader, I think it's a huge opportunity. Trading in and out of this group. The only stock which I've ever recommended in the Adani group is Adani Wilmar, which you really can't say that it's a pure like Adani stock, because that's not been the focus area. Their focus area has been on infra and ports and the other businesses. So the way I see Adani Wilmar going ahead is sooner or later we'll have either Wilmar or any international group finally taking it out of the Adani group. So this is one stock I've been recommending, and when it fell to levels of about 290, 295, I think it was a great buy. Even at the current levels, I think it's a decent buy.
Okay, all right. Amrish, what about that one stock that you normally give us? Which one is it today?
This time it's a large cap Hero MotoCorp, a front runner in two-wheelers. In fact, if you look at the Q2 earnings, they were quite decent, about 10.8% higher in revenue Y-on-Y. EBITDA went up by about 14.1%. In fact, the EBITDA margins improved by about 40 bips to about 14.5%. And if you look at the product portfolio, there has been a premiumization over the last 8 quarters, and they have clocked the highest ever festive sales of about 1.6 million units, which in fact led to their market share increasing to about 31.6%. And if you look at the market share in the 125cc segment, even that continues to grow because of the sort of uptake which has happened in Extreme 125. And if you look at the overall revenue growth, it has come from both rural as well as the urban segment. In fact, urban segment we have been talking of, that's slowing down for the other players, but that's not the case for Hero. And even the exports, the industry has grown by 16%, they've grown by about 30% in H1 FY25. You look at the EV business, even there they are improving the market share. They did about 11,600 units during the festive season as compared to 5,000 units last year. improved their market share in about 5 cities by about 20%, in 10 cities by about 10%. So clearly, I mean, they have a strong sales network and an increased dealer density in these markets. And going ahead, I'm expecting more product launches and a continued sales momentum, like continuing because of the marriage season. And for FY26, I'm expecting an EPS about 260. And with this, my target is about 5980, which is about 25% higher than where we are right now.
Amrish, Honasa Consumer, it's rebounded from its recent low of 222. So it's rebounded about 10%. Considering the kind of fall that it's seen, do you think it's attractive now? The risk reward may be favorable if someone's willing to hold?
In fact, I mean, if you had asked me like around the IPO time, I was not that bullish on that stock. But after the sort of performance it has shown and the correction which we have seen now because of, I mean, like the numbers which came for Q2 and the management commentary, clearly I think it was a buying opportunity if you're looking at possibly the next 2 to 3 years. I mean, you can't be buying this stock for the next quarter or two. I mean, one needs to look at it from the next 2 to 3 years, looking at the sort of, I mean, the brands which they'll have in the skincare segment, which is expected to grow in a big way. I think one should be buying it from at least a 24-month perspective.
Okay, Honasa, indeed. Quite a move coming through today, 10%. Amrish, just allow us a moment. We'll recap today's trading action and then we'll come back and have some more questions for you. So the story now is that from about a 350 odd point, 370 point fall at 3 p.m., there's been a mild recovery and the index is trying to inch back towards at least the 23,950 mark, if not 24,000. That's still about a 325 point cut, but some attempt at a recovery from 3 p.m. onwards. If we talk about the weakness, and it's all large cap led, and within large caps, it's pretty much all encompassing. So whether it is financial stocks, insurers, whether it's autos, technology, most parts of the large cap screen are weaker. Weakest names include SBI Life, that stock's down about 6%, followed by HDFC Life, down 4%, on fears that the bancassurance channel could see further regulatory curbs. Then there is M&M, down 3.5%, a lot of profit-taking coming through on Mahindra & Mahindra after the buzz around its recent EV launches. Infosys, HCL Tech Mahindra, TCS, they bring up the IT weakness today. And then there are other big stocks like Reliance, which have weighed on the market, down about 1.5%. So Titan's down 2%. There's Hero Moto, there's Bajaj Auto from the auto space, Eicher Motors, they're down as well. So all-round weakness, Rima. I think on the Nifty, you can only count Adani as a winner. Shriram Finance and State Bank of India, that's pretty much it. I mean, only 3 to 4 gainers on the Nifty today.
Well, at least in the broader markets, there were more winners than losers because the advance decline ratio was positive. About 1,350 stocks advancing for 1,100 stocks ending in the red. The mid and the small cap indices end flat, but with a positive bias. But they came off nearly 1% from their day's high.